Market Peak with Seth and Matt. All right, we ready?
Yep.
Let's fucking start this shit. All right. Hey, this is Seth and Matt with Market Peak, P-E-E-K. And I think that was too many E's, but you get the idea. This is Sunday, May 2nd. And we are going to be talking about gold mining. Also talking a little bit about SOS. Have found an interesting article about what it does. It's a recent article. And also, we're going to make our predictions about what we think is going to happen on Monday, what we think is going to happen down the week, and all that. So please subscribe and like. Subscribe over there, like in this area. Tell your friends, tell your neighbors, tell your fans, all that stuff. Leave us a comment with your thoughts. That would be great. We're not financial advisors. We're just two guys talking, man. D or D squared, you know, research it up. So with that, I think we're just going to go ahead and jump into the feature, which is gold mining. And it was something you want to talk to. We actually been doing a little bit of like a mining chapter, you could say. We did uranium a couple shows ago. And Matt, if I'm not mistaken, you want to continue. You have a couple other things you want to talk about with different mining minerals and stuff, correct?
Yeah, eventually copper.
Okay.
And I think commodities are hot right now.
Yeah, for sure. Commodities are so hot right now. All right, so in continuing with this chapter, we're going to go ahead and start with gold.
All right, so the big story right now is inflation, which is typically a price driver of commodities, particularly gold. If you look at the gold chart right now, we're consolidating between that like 1700 and 1780 level. We peaked out at just above 2000, which is pretty close to the previous high set almost 10 years ago, a little more than 10 years ago maybe, and during the great financial crisis. And it looks like we're tracking for a move higher.
Sure.
And that makes the space, particularly gold mining stocks, worth looking at. Gold mining stocks are very, very sensitive to not only the price of gold, but to macroeconomic conditions.
Sure.
COVID-19 shut down a lot of physical mining operations. Gold mines are typically located in very politically unstable regions, as you know.
Outside of the U.S., that is.
yeah, outside of the U.S. A lot of North and South African, kind of like regional operations.
Sure.
Constantly being disrupted because of war, because of political instability, that sort of thing. So when you have price volatility like that, there's always opportunity. But first, let's just talk about the gold mining space and the difference between the majors and the juniors. So when you hear a name like Barrick Gold or Newmont Mining Corp, you're hearing about major gold operators who have been in business for a long time,
Sure.
Who have consolidated their sector, who have a proven track record, right? Who have excavated a lot of gold, who have the money and the leverage and the financial backing to buy out smaller, more less liquid companies
Sure.
that we call junior gold miners, who in many cases haven't actually opened a mine yet.
Sure.
Who are just in that exploratory process. So you have your majors, people like Barrick, Newmont, and then you have your junior miners, right? Now, your junior miners obviously have a smaller market cap. They're in the process of taking core samples. They're doing their, geotechnical analysis of, the areas. They're looking for mineral deposits that can kind of substantiate what they are expecting to be a large gold deposit. So they take core samples.
Okay.
So let's really quickly unpack like the stages. So if you're a junior gold miner and you have a prospect and you want to kind of substantiate those claims you're making, the first thing you do is what they call preliminary economic assessment, right? Then you move on to pre-feasibility, then feasibility. You talk about how you're going to operate this mine, what your capex is going to look like, your all-in costs. And at that stage, you've got some financial backers. And then after feasibility, you typically add a major investment partner. And then at that point, you open a mine, and then all systems are go.
Yeah.
So it's a lot of different segmenting of it basically what is like a multi-year process.
Sure.
Because you got to prove to your financial backers that there's gold there.
And I'm sure they want more than just your standard proof.
Yeah, and a lot of these people are engineers, they're geologists. They might not have actually mined gold physically.
That's true. You can find all the gold in the world if it's going to cost too much money to get to it. And equipment isn't cheap, that's for sure. So it's one of those situations.
And that actually kind of segues me into the next major point about junior gold miners. So if you look at the price chart of any junior gold mining ETF or any junior gold mine stock period, it's going to look very volatile. And that's because oftentimes these junior gold miners will deliver on their core samples, right? They'll get up to the feasibility stage, they'll open a mine, and then they won't be able to operate it. There'll be massive cost overruns. There'll be unforeseen, equipment failures, that kind of thing. And that can really put a project under.
Especially really repairs. Quickly. Like watching these shows, like the number one thing that slows down, costs money, is just repairs. Like these machines that dig and tunnel and move dirt and rock and earth, like they go through a beating. And when they do break, most of the time it's not like you have the part sitting there. So you're fabricating stuff and welding stuff on site, just to make things work. So it's the repairs definitely can put a miner down. There's no doubt about that.
Yeah. Excavating material is tough. You've got to have a high pressure removal system for all those trimmings. You have to, got to have a shaker plant to actually filter through like some of those like rougher materials.
Sure.
All that costs money. There are only
lots of water.
Companies. Yeah, a ton of water, a lot of hydraulic fluid, a lot of oil. And like you said, just the input costs, like anything from structural steel, cement, you need to build your walls. I mean, it's a lot goes into it. It's very easy to fail. And also in the case of gold miners, you're also looking at the price of gold. If the price of gold starts dropping, suddenly you're underwater.
And that's why last year was so amazing for gold, is because fuel costs were super, super low and gold costs were super, super high.
Yeah. That's another good point. Oil is the number one industrial input. If oil costs are high, diesel costs are high, your operational costs are going to be high.
Yeah.
You have generators running 24/7.
Sure.
So basically just like the operational all-in costs are a big key factor in whether or not you as a major financial investor are going to back a company that basically is operating on a premise,
sure,
right? On an idea.
Sure.
So that's pretty much the story behind gold miners. You have your majors, established players. You have your junior gold miners, the people who have a prospect, are probably sitting on top of a gold deposit, but are kind of like searching for a way to partner with someone who knows how to operate a mine.
Sure.
Right. So, and that's the big challenge there. So I guess we could go right now onto our next chart, which is International Tower Hill Mines. I wanted to look at this company. It is a junior gold miner. It is currently in the preliminary feasibility report stage. It's looking for a major investment partner. It is suspected to be managing the largest gold deposit in North America right now.
Wow.
It's Canadian company.
Canada? Okay. Canada.
Yeah.
Okay.
And the project is called Living Good. It's located in Alaska. And they're looking at specifically about, let's see, basically almost 7 million ounces.
7 million?
Yeah. Mm-hmm.
Wow.
Yeah.
Okay.
Now, some of that, not all of that is gold.
Sure.
Right. Some of that could be copper. Some of that could be other things. But of total mineable mineral reserves, you're looking at 7 million ounces.
Wow.
The projected shelf life of this mine is roughly 25 years. So they have something. The problem is, and it's an open pit mine. So it's just like you're moving as much earth as you can.
Sure.
You're excavating, and you have a lot of big equipment.
Sure.
And it can be difficult because you need to shake through a lot of dirt.
Yeah. Yeah.
You know, and like you said, the energy costs, the oil input,
it's massive.
that kind of operation is
ridiculous.
Yeah,
up to like $50,000 a week. Like it can get up there.
Yeah, and you're always operating in kind of protected areas.
True.
And you're having to, really worry about your oil spillage.
Yep.
Your cleanup costs.
Yep.
So
Reclamation's huge. Like once you're done, you got to return the land to its previous state so nature can kind of, it's for sure.
Yeah. And like the problem with this, before we talk about more, like the upside, is that International Tower Hill Mines, despite possibly sitting on the largest gold deposit in North America, has a very high all-in operating cost right now. So right now we're looking at about $1,000 per ounce.
$1,000 an ounce?
Yeah, versus the industry average of around $700 an ounce.
That's what it'll cost them to extract it.
Just to break even.
To break even. Okay.
Yeah. That's breaking even on paper.
Sure. I got you.
Right. So that's breaking even on operating costs on paper.
Sure.
You're going to have cost every month.
Yeah, 100%. 100%. Right. Those repairs, they're going to get you. That's for sure. Wow.
Yep.
All right.
It's really easy for mine to get shut down too. It's a very safety sensitive workplace environment too for the not that you have a lot of employees, you're really dull on
a lot of machines and automation, right?
Mostly, machines, right? Because they can do it quicker and safer, more efficiently.
I gotcha.
But let's talk about the upside. So if you look at the price chart of International Tower Hill Mines, it's kind of range at about like $1 right now.
Yep. Had a nice jump. That's for sure.
It had a great jump along with all the other junior gold miners. Peaked out almost a year ago and has since then kind of precipitously declined alongside, the price of gold. Obviously, junior gold miners as well as majors are going to track the price of gold,
sure,
which tracks, all these other indicators. But if the price of gold holds here and the company can find a suitor, a major investor, and they can start actually excavating, I think the prospects for steady returns are high.
What if they find a lot of copper though? Like that just throws the economics all off because you're not getting $1,000 an ounce for copper. Be interesting.
Yeah, that's a good question. I haven't really done much research into that.
No, I didn't expect you to have an answer for that. It's just an interesting thought.
So we're looking at probably at the very least a sizable jump over the next year, particularly heading into this summer, where I think the inflation story is really going to take root, not in a devastating way, but in a way that will actually be a tailwind for commodities, particularly gold. And so that would be
just to jump in. So the gentleman I was telling you about yesterday that I have these more intellectual conversations with, he's like, listen, like commodities is where it is. He's like toilet paper. He's like, don't be surprised if we run out because a container costs $10,000 to ship over to America from Europe or from just about anywhere, because to get here, we're in the middle of nowhere. He's like, that costs more than the toilet paper. So companies aren't even going to like ship toilet paper because it's too much to ship it. So he's like, he thinks that in line with what you're saying, now we're talking about stock, but like physical commodities, and stuff like that, and rice and all that. He's like, don't be surprised if it gets really, he doesn't think we're going to run out, but he thinks stuff's going to get really expensive.
Sugar.
Yeah.
Sugar.
Although we produce a lot of sugar here. We use with beets. We make beet sugar. So a lot of white sugar we do produce here.
Really? I never knew that.
Yeah.
Through beets.
Yep.
I've never actually eaten a beet.
Really?
Have you had a beet before?
I have a Russian wife, dude, so beets are on the menu every once in a while. I like beets. They're cool. I'm okay with beets. She makes borscht, and borscht is actually with shredded beets in it. It's funny, too. I mean, we're really jumping off here, but when you eat it because the beets are in there and it's red, if you don't remember, you're peeing red, dude, and you feel like maybe there's blood in your urine or something like that. It's like, oh, yeah, I had borscht. If you eat beets, it'll happen. I'm not kidding. It's kind of funny. So all you gentlemen and ladies, but with the gentlemen, it's obviously a little bit easier to see, but it's kind of a neat trick. You want to play a trick on somebody's like, oh, mom or bro, I think there's something wrong with me. Anyway, we jumped way the hell off. So anyway, back to this. So Jeff Pontius.
I'm going to be
Lefroy
testing this tonight. Yeah.
Oh, nice, bro. Look at you. You know what?
Yeah.
I've had these sitting here for a little while. These little Glenlivet bottles. Someone brought up when we recorded our other show because we said so. Someone brought a bunch over. We were drinking them, so I have a few left.
Was that a 14?
12. Glenlivet 12. Not bad. Not bad at all.
Okay.
So Jeff Pontius, he's a CEO, right? And
yes, the CEO.
All right.
$200 million market cap.
Sure.
So there is some negativity surrounding this company right now because it has kind of underperformed the junior gold mining space considerably. If you look at the GDXJ, and that's just a junior gold mining ETF, a popular one, you're looking at about a 30% drop since the peak August last year versus International Tower Hill Mines, which has declined by about 50%.
Sure. Yeah.
But one thing that never changed is the fact that they're probably sitting on a major gold deposit, right? So the gold's there. They found it. They're managing the project. They just need a partner, right? They also need the price of gold to go higher. And if it goes higher, and look, if you look at the gold chart, we've been consolidating pretty steadily. It looks like we're forming a breakout wedge right now on, like you can look at the year-long chart.
On GDX or GDXJ?
Either one.
Okay.
Or just GLD, regular gold ETF. If you look at gold, where it's headed higher. Inflation, if that really takes root over the summer, if people get in there and start spending, and the velocity of money increases and the dollar starts dropping a little bit, that's really good for commodities, really good for gold.
True.
I think this one is a really good addition to your long-term portfolio. Your entry cost is low. You could spend $500 on this thing, get some shares, and if it pops, it'll pop. If you looked at the volatility in the junior gold mining space a year ago, you saw some significant rallies.
Yeah.
And it's always good to have a little bit of a hedge in your portfolio, right?
True.
If you're looking for diversification, gold is a good place to be. They generally recommend you allocate around 10% into gold. You could buy physical gold, but that's difficult. You have to store it too, and then you have to sell it later on. But junior gold mining is a space you can normally get leverage in. You're looking at a lot of 5 to 10x return potential. If you want like a simple way to expose yourself to gold, GDX, GDXJ, GLD, any of those ETFs, any of the liquid ones, perfect. So the big question I have for you is, do you think gold's going to get head higher this year? And second of all, more importantly, do you think Bitcoin and cryptocurrency is going to steal some of gold's thunder?
I don't see gold going higher this year. I just don't. I feel like it hit a peak that it was going to hit, and I feel like it's kind of settling down. People like the economy's picking up. People are probably thinking, okay, it's time to move away from gold. And clearly the United States, especially, like I said last episode, we're on track for like 6.5% economic growth, which is massive. And that has nothing to do with gold. So if you can get into a stock, if you can get into even an ETF, sure. But if you can get into a cryptocurrency, which I expect to do really well, like look at Ethereum, it's about to hit 3,000. In fact, it might even hit. Let me see, where are we right now? 2952, man. It just keeps going and going and going. So I expect cryptocurrency to definitely replace gold this summer, maybe even like for the rest of this year.
Yeah. And now to think about it, if you look at, relative performance levels, I mean, cryptocurrency has just put gold to bed.
Yeah, pretty much.
And the thing is, though, there are so many gold bugs out there. There are so many, particularly older investors, people who believe that gold is the key to shielding their portfolio. Yeah.
I hear you. It's true. It's the one thing that, like, throughout the history of civilization, it's the one thing that you've always been able to trust to hold its value.
Yeah, it's a store of value. Exactly. It's a store of value. Is Bitcoin a store of value? I think we can say it is at this point.
And if you go to the Middle East and a lot of these like really, really rich countries and all that, they have a lot of gold. Like, I'm not talking about just on their body, like bars and bars of gold, because that's where the money is. And when all hell breaks loose, that's what's gonna be, which may or may not happen. So you're saying you got to store physical gold, but if you can keep like, I don't know, X amount of ounces and somehow something goes awry, provided you can get out of your safety deposit box. So you got anything else on the gold mining?
All I'll say is this. You're looking at a $1.2 trillion market cap for BTC Bitcoin and an $11 trillion market cap for gold.
There you go.
And I think that ratio starts to change in Bitcoin's favor moving forward.
It seems like it. That's for sure. Yeah. All right. Well,
but don't sleep on gold. Don't sleep on junior gold miners. It's been a hard hit space over the past few months. We're consolidating. I think you'll get rewarded if I'm not saying allocate a lot into this, but there's opportunities out there.
Sure. All right. Well, please don't forget to spank the like button around here. And if you're still watching, you like what we're doing, please subscribe. And I just want to talk about SOS real briefly, talking about mining. Now we're going into crypto mining. I'm just now getting, the serendipitous events of the fact that, we're moving into a segue that kind of rounds out the edges, if you will. So here's SOS. Let me go to the 6 month. You can see it had this really, really big pop. It jumped up, and then, of course, the short sellers came in, and the lawsuits happened. If you lost money in SOS, call us, and class action and all that other bullshit that, it's amazing. Tesla, QuantumScape, GameStop, they all have this crap happening. The reason I want to bring this up, though, is because I didn't realize, and most people, you don't do as much research. It's a little bit more of a challenge to do research about certain companies, and a lot of people just take things at face value. But you can see there's an article by Investor Place, and it's understanding what it does, which we know what they do to a degree, the bottom line on SOS stock and all that, why it's declined. Obviously, I just told you why it's declined. So, but you can see understanding what it does, and I actually kind of shrunk this down just a little bit. But for those of you out there, here, let me turn off the cameras for you. For those of you out there that didn't know this, it's kind of interesting to see, and all that they're involved in, and maybe it can help you make a decision as to whether or not you want to be involved or not. So, according to a March SEC filing, SOS was set up in Delaware in July 2004 as China Risk Finance LLC. Initially, it provided credit analysis services. The American Depository shares commenced trading in 2017 under the symbol XRF. In 2018, the group started to transition the business to other industries. So it also had an acquisition of British Virgin Islands company, and it was finalized in May 2020. So this is more recent stuff. The second half of 2020 has been busy. The management decided to cease their legacy peer-to-peer lending business and switch to a high-tech services, including marketing data, technology and solutions, and then rescue services in China, which is kind of interesting. I don't know. I mean, I don't know how you would invest in rescue services unless you're investing in, I don't know, special technology that they use out in the field or something like that. The stock ticker was also changed to SOS at the time. The current business ranges from data mining to analysis to high-tech services. There's also the Cloud Emergency Rescue, which is a SaaS, SaaS, software as a service. On April 12th, SOS announced to have entered into a non-binding letter of intent to acquire the majority of equity interests in 3 U.S.-based power plants for its planned crypto mining operations in North America. That move is consistent with management's anticipation to grow its crypto mining operations. But the thing is, SOS has zero revenue from their mining. Hasn't happened yet. It's interesting that I don't know where you would get a power station, how a power station is going to enable you to cryptocurrency mine unless they're buying it. Just use the power to jump into that cryptocurrency sector. Maybe it's renewable energy. That's one of the things that they talk about. Like we use a dam that's renewable energy, so the mining that we do is green. I find it hard to believe that, well, if Trump was in, forget it. Biden, who knows that China could just come in and buy 3 American power plants. I don't think that's going to happen. But anyway, that's what I got. Any thoughts out there?
That's interesting. I'm kind of confused and a little baffled at what's going on here. It seems like they just are looking to enhance profits, jump into mining.
Because they're all over the place. Okay, now we're going to do this,
literally.
We're going to do that, and yeah.
It's interesting. I wonder if that's just, reflective of how a lot of Chinese companies are operating right now.
Sure.
If you can do one thing, if you're kind of like in the computing space and like the, data software space, maybe it's best just to go everywhere in every direction.
Until you find something that's going to make you money, perhaps, maybe.
And, if you look at Tesla, Tesla enhanced its profits significantly this past quarter through, owning cryptocurrency assets.
That's true.
So
that's true.
And Elon Musk has his hand in literally,
all the coolest cookie jars out there.
Yeah, exactly. That's exactly what I wanted to say.
Yeah.
But I don't know. Look, I from a technical analysis standpoint, I'm looking at the year-to-date chart. It looks like we're set to break out. We've been holding support above that 450 level for a long time now.
So yeah, you're absolutely right. It's pretty freaking low right now, and you can see it.
But it's stable.
It's stable where it is now. Yes, I can say that. It's definitely found a stable spot.
I would, and I know that I say this about most of the stocks that we cover, but we cover certain stocks for a reason, and that's because we think they're opportunities.
Sure.
And if you look at the chart and the price, I think this one is an opportunity. And you've said this time and time again, if a stock has a big community surrounding it, sometimes fundamentals can take a back seat.
Sure.
And look, we're assuming that this power plant deal is all nonsense, but maybe it isn't. If a company is expanding this rapidly into new things, I would take that as a sign that maybe there's opportunity on the horizon.
Yeah, if they're going to get 3 more power plants and turn to crypto mining, it could definitely be a positive thing with where cryptocurrency is going, especially right now. Turning those power plants into mining, though, that's not something that's going to happen overnight, especially with a chip shortage. So if you take that into account, it might be a while. So, all right. Well, that's pretty much all we got on SOS. We do have a couple corrections. So we had someone who left a comment on our previous episode, Alejandro, I believe it was. I'll look just so I could use his name. I think it's only fair. So Blue Origin was actually founded 2 years before SpaceX. So, I'm sorry, Alasdair. So he basically is like, in fact, I can read it for you. It's really nice and succinct. Blue Origin established 2000, SpaceX established 2002. So it looks like Jeff Bezos was like, I'm going to do that. And Elon Musk was like, I'm going to do it, but I'm going to do it better than you. So, and then the competition that you referenced in the shrimp, whatever, I believe it was
Aqua Bounty.
Yeah, Aqua Bounty. They don't farm shrimp. It's just salmon for them.
Yeah.
Which is
I mean, so I was talking about
the technology,
like, as far as aquaculture is concerned.
For sure.
I mean, because Aqua Bounty is the one being talked about.
Yeah, and Aqua Bounty isn't that the one that is in the ARC portfolio, if I'm not mistaken?
Yeah.
Mm-hmm. So
absolutely.
If we can get shrimp in there too, that'd be great. I'm just saying.
I think if Aqua Bounty starts to really take off, shrimp's going to go with it.
Well, we'll see. All right, so what do we got? Predictions. So let's go ahead and start with Ethereum. Where do we think? You think Ethereum's going to stall out anytime soon? You think it's going to keep going up?
So we're at a big even right now, 3,000. I think, so three things could happen right now in relation to Bitcoin. You could just have a sell-off at 3,000.
Ethereum.
Yeah. And, people anticipating a sell-off at a big even. Sometimes it becomes a self-fulfilling prophecy.
Sure.
You could just smash through 3,000 and head higher.
Sure.
Although I don't think we'd immediately get to 4,000. I think you'd see consolidation before that. And this is what I think is going to happen, we're going to hang around that 2,700 to 3,000 level, and Bitcoin's going to catch up.
Okay.
And then Ethereum is going to head higher. And then Bitcoin will take a pause, allow Bitcoin to catch up, that kind of thing.
Dogecoin, what do you think? It's at 39 cents right now, so it's back to pretty close to all-time highs.
A lot of people are looking at this one. There are a lot of bag holders. Whenever there's a lot of bag holders, that typically makes me, want to stay away from a trade. That being said,
that's not what we want to hear. And who's a bag holder at 39?
A lot of people.
You think? I mean, because the highest you could have purchased it was like around 44 cents. So you're not the bag's not that light, or that heavy, or however you would describe it.
I just think there are a lot of people putting too much faith in Dogecoin.
Sure.
But
that's that's the self-fulfilling prophecy.
Exactly,
that's the whole reason it's happening, is because people are putting too much faith into it. So, is it misplaced faith? Doesn't look like it right now. Till it all comes crashing down.
That's true.
And then
I don't think it's going to come crashing down.
I don't think so either. I think it's good. I think $1, man. I think $1.
Yeah.
All right. Yeah. So next week, up or down for the week? What do you think?
Up.
Up? Okay.
Yeah.
Nice.
Absolutely.
Oh, no, absolutely. Okay. All right. Well, I guess that's pretty much it, folks. Any last minute thoughts?
Yeah. I mean, don't be scared of the market. Take a look at minerals, and minerals and, things like oil, it's not a space that is retail investor friendly necessarily. It's a volatile space you have to really do your, as you put it, D squared on. But there's opportunity there. If you take a look, if you listen to what a lot of major hedge fund managers are saying right now, they're all starting to talk about copper, about silver, about rare earth minerals, uranium. So, I mean, if you want to look at something that may not be an opportunity right now this year, but maybe in a couple years, I think the metal space.
So this is long only, folks. That's kind of what he's getting at. You're not going to see a whole lot of price action, really.
I mean, I think junior gold miners can see some price action if we see a spike in inflation this summer.
Sure. All right, folks. Well, leave us a comment with your thoughts. Let us know what you think. If you haven't already, subscribe, smack the like button, all that. If you want to email us, it's wearemarketpeak@gmail.com. Check out our other show, Never Prepared, man. You'd think that by now I would be prepared, but check out our other show, Because We Said So. It is a current events show. There's the three of us, Laz, my brother Lucas, and then we always have a guest on who joins us. Sometimes we rock just the three of us, but 90% of the shows with an extra guest. And, tell us what you think. That's a podcast as well. We get a lot of listens, not as many views, but if you want to listen to that one, just podcast, that's fine also. All right, well, rock on. Thank you very much. Thank you, Matt. And we'll see you guys next weekend. That's right. We're going to be a weekend-only show. So I got really busy and Matt got really busy. So during the week, you're not going to catch us. But we'll see you guys every weekend.